you do if you were an evil dictator?
I would just shut everybody's shit down and say it was an attack from another country. If New York or LA collapses, the rest of the world follows suit. So talk about a lot. Only like 3% of your money is actually real. The rest is a digital number, and we saw it with the banks collapsing. All these,
and then they get bought up by bigger banks.
But the payout is $250,000. You're insured. Your money is insured for. You could have $1 billion in this bank. You're paid out $250,000,
and then where'd the rest of that money go?
So there you have it from Joe Rogan, and he's talking to Post Malone on his own podcast. And what they're talking about here is basically they're describing what is the solution. They're talking about a dark time and talking about if you're not able to use your money, if you're kicked out of the system, what can you do? You can opt out and you can have Bitcoin. They can't control Bitcoin. Bitcoin is decentralized money that the banks don't like. Remember that. And with that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. We have a jam-packed video for you today, but we have another clip from another expert, so make sure you watch to the end. Getting straight into it, looking at the Bitcoin price chart. So everybody talks about the Bitcoin 4-year cycles. At the current time it's recording, Bitcoin's coming in below 30,000, 29,627. And as you see here, we've came down, kissed this macro support. And right now, per the RSI, we bottomed out, came back down, made a double bottom, and then started putting in higher highs, and we're stair-stepping our way out the depths. The technical target, we talked about this on previous videos, where Bitcoin should be going up to at least touch, is this $50,000 threshold, if it repeats the same thing it did in the previous 2 cycles within the bear market. Remember, we're in the bear market. Remember the 4 years. So right now, we're in 2023. July, August of 2023. So if we go back to July, August of 2019, where are we at? We're about right here. July, August of 2019. You see right here, this is where we were at 4 years ago, around the $10,000 threshold. So we're up by a factor of roughly 3, but Bitcoin went for that run up, that rally before cooling back off and retesting that 200 moving average. So right now we came back above the 200, tested it. Now we're testing the 20, and this is looking very bullish because we had that bullish cross the 20 and 200. Looking back in the charts, Bitcoin did the same thing, roughly came up, kissed this technical target, but then came back down and kissed the 20 and went off to the races. So keep this in mind. Will Bitcoin come up, and how fast will it get up to this $50,000 threshold? And looking at the RSI, you see we came up and hit a peak and then a double peak. And if we zoom into the price action to see what we see, we can see that we peaked up almost to that 70 level and put a high in, but then we came down and put in a higher high. So this move isn't over with yet. We had the bullish cross, the 20 and the 200, and we're respecting both the 20 and 200 here, and then bouncing off of that 20. So are we going to see another leg up to the upside? That could be what's in the cards for Bitcoin. The last time we came down and touched this 20 was 19.7, and then blasted up to 31,000. Came down, hit this 20, 25,000, blasted up to almost 32,000. So are we going to see a big bounce off of this in the weeks to come? That could be what's in the cards for Bitcoin. So taking a look at the total crypto market capitalization, what do we see? What do we expect? So right now we're hanging around between the 220 moving average. At the current time that's recording, market cap's coming in at 1.14 trillion, and we're sitting right on top of that 20 moving average. This is looking bullish, but we're not out the woods yet. And as you see, in previous cycles, we have our peak, come down to the bear market, come up, get overbought, but then cool off, and then ultimate blast off. Right now, we're just stair-stepping our way up. Are we going to get overbought before the next halving? That could happen, then we will have a cool off. Or we could just continue to stair-step our way up, slowly but surely, after the halving, and then get ready to rip to the upside. Patience is key, patience is a virtue, and you want to hold tight. Right now, zoom into the price action. What do we see? Similar price action than the Bitcoin price action. We're seeing we bottomed out right here around the $731 billion market cap, and we came up, tried to test that 200, got above it, but then got rejected, but came and retested that 20 moving average before ultimately bouncing off of it, coming back down, retesting the 200 before ultimately coming back off of it, bouncing. And as you see this wick up here, we didn't put in a higher high on this bounce up yet. So this is sort of, you're seeing Bitcoin put in a higher high in its price action, and then the total crypto market capitalization isn't putting a higher high right here. It actually put in a lower high. And we didn't put in a lower low yet, so the trend's your friend to the end. We're still stair-stepping our way up. But this might be an indication where you might want to be more heavily weighted into Bitcoin versus alts. Without further ado, we have a wall of money coming, and Max Keiser's talking about it and talking about the institutional interest and how they're going to be positioning themselves into Bitcoin. Let's hear from Max.
And my first question back in 2011 was, is this an asset class? Because if it is an asset class, if it's a new asset class, then the potential is enormous, because there's $100 trillion, $200 trillion worth of investable assets around the world, and they're very competitive with each other. The hedge fund industry, the private equity industry, they're extraordinarily competitive, and they're all looking to, get the edge on the other guy in the industry. And if Bitcoin enters that arena as an asset class, and you have hedge funds starting to outperform based on their Bitcoin position, you're going to have this huge groundswell of capital moving into Bitcoin. And I think that's the stage we're at now. So when a BlackRock or some of these other big funds, Paul Tudor Jones was, I think, probably the first hedge fund to mention Bitcoin in a big way. And if you listen to Larry Fink and these people on Wall Street, they, the phrase that they use will be, well, we see it as an asset class. So that's like a green light that says once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. So even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. And they are very good at keeping the price of gold and silver down. Again, governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold.